Now, there are a few different ways that you can exit your trades, and one really interesting way is through the Chandelier Exit Indicator. And before we cover that, please hit that like button, hit the subscribe button, and that way you can be notified when we put up videos just like this. And I will say that I'm a little bit behind in getting videos up as me and the family headed to Costa Rica last week. What a great trip. And I think it's just another example of why trading is such a great job. You could do it from anywhere, and you don't need to ask your boss for some time off. For example, here, this is the end of day review I did at the villa that we stayed at for part of the week. And this one is poolside at the resort that we stayed in the second half of the week. And as a risk manager first, let me just say, keep the sunscreen on and just keep the computer out of the sun because it gets pretty hot. Anyhow, the Chandelier Exit Indicator, it's just a volatility-based indicator, and it pinpoints your stop loss placement with the help of the average true range calculation. And they call it the chandelier, and it's not a mistake because the chandelier hangs from your ceiling just like this indicator hangs from the highs or the lows of the current price. And the overall purpose is to keep a trader in a trade as long as that trend is intact. And once price moves against the position, a set true range multiple, you get out of the trade. Now, being a volatility-based indicator, the chandelier exit is going to bring your stop closer to price during periods of low volatility. And if there are periods of higher volatility, the stop will be further away from price. And this is just a result of the average range of prices increasing and decreasing. But this feature, it allows you to take advantage of momentum moves in price without being stopped out prematurely because the stops adjust to the price action. In fact, the ATR multiple it's used is 3, and it's designed to keep you in the trend longer as opposed to just getting out after a general swing in the market. So how do we use it? Well, once you enter a position during your trading day, our normal procedure is always to set a stop loss. And one trader may decide to use a profit target. Trend following traders prefer to let the trend and the trade run using a trailing stop. When you use the chandelier exit as a trailing stop, it enables you to stay in a strong trending market longer than exiting at a fixed target. Once your volatility decreases, the trailing stop moves closer to price, so traders do not give back a whole lot of profit. Now, the stop loss in a long trade will hang from the absolute high or go up from the lows for a short, and it will extend below the price when you're going long. And it gives a true stop that's in line with the full range of price. So as price movement evolves, the stop will trail in line with a calculation. As with all stop loss techniques, you do not move your stop loss further away from price. Now, the chandelier trailing stop, it's meant to have you exit when the trend changes, but it is not a selling or a buying signal indicator, okay? It's not designed to be used as an entry. Now, the indicator has 2 lines, one for short, one for long, and it's going to flip to the opposite once price crosses the line. The general rule, close your position once the indicator gets triggered, but do not open a trade in the other direction like people do with the parabolic SAR. We have different settings we can adjust. The look back period, right? This is the number of price highs and lows to look back. And the ATR multiple, this is X times the average true range, and it's usually about 3. And that's what Charles Lebeau set it at, a 22 period bar setting and a multiplier of 3. And this is the calculation here. Your charting package is going to do it for you. Now you can adjust the end setting, okay? But the risk is having too close to stop and having a stop that's too far away from market action. So if your exit's too close, you get taken out of the trade just during normal market fluctuations. If it's too far away, you give back a lot of profits because you're staying in the trade, and you might be in the trade long after you should have exited just by looking at price action. But the bottom line is we want to get the maximum gains possible while exiting the trade when conditions have obviously changed. So using it in an uptrend. So as the price of the instrument makes higher highs and higher lows, right? That's an uptrend. You're looking for longs. That's just a simple price action definition, right? Higher highs, higher lows. So being able to stay in the trade while the uptrend's intact, that is a good use of the indicator. So this is a daily chart. We have a breakout trade entry from a double bottom and a trend line break. So as the stock continues to trend higher, the indicator tracks under price. Over on the right, you can see the final stop loss location and then the sell-off. Now, as a trader, you're going to have a bit of a buffer zone below the chandelier if you want to avoid getting taken out on a simple fluctuation in price, especially during periods of low volatility. Now, part of your trading plan will include your decision of exiting on a touch of the line or a specific price just under the line. Now, some traders may exit at the close of the period. But this runs the risk of a large move against you long before you exit. Really, the easiest way to use the indicator, trail the stop after the period closes, continue to lock in gains before the stop price is hit. And in this example here, the stock actually ran 66% before exiting. In a downtrend, not much different. We have a price action downtrend and an upsloping trend line break. So let's just assume you enter short on the break at the trend line and your initial stop is at the red line above the entry. So as long as your price continues to make lower lows, the stop will continue to be adjusted, helping you lock in your gains. Now notice on the right, price has formed a trading range. That red chandelier stop line's not moved, right? It's low volatility. Not a whole lot of price range there. So your stop right now on this chart will be at the red line and it'd be a 6% gain on a short trade. It's a simple indicator, right? So let's wrap it up. When you talk about trailing stops, they're a great tool for attempting to at least capture a large portion of the trending move. Now, if we use the highs or the lows of price plus the ATR, right, as we do with the chandelier, it gives you plenty of opportunity to catch the meat of the move. So as long as that trend continues to run, the chandelier will keep you in the trade without being concerned with just getting ticked out on a wild swing. Now, like with most indicators, you can adjust the settings, but you have to ensure that you're comfortable with a loss of profits or being spiked out of the move, right? Frustrations for both, right? Large losses or being spiked out of moves. It can lead a trader to do a lot of things that are outside their trading plan in order to make back, what they lost or what they felt they were cheated out of. So disciplined trading is the key to your success. When we use it as a trailing stop, it enables you to stay in a trend longer, right? Than just exiting at some random price target. And once your volatility starts to decrease, the trailing stop is going to move closer to price. So you're not going to give back a whole lot of profit. Now, as mentioned, it's meant to have you exit when the trend changes, but not as an entry signal, right? So keep in mind that during the sideways consolidation scenarios, you may see many flips of the indicator going from long to short. So you have to have a proper trading plan that avoids choppy markets and use the chandelier exit as it was intended to do so. And if you just look around our channel here, there's a lot of videos covering how to trade a trading range. So that's that. If you have any questions or any comments, you can put them below. As you can see, I usually respond to legitimate questions and great comments. We'll talk to you soon.